Welcome, welcome, welcome. This is Salome Rue. Welcome to my channel, which is Building You and Your Money with Salome Rue. So thanks very much for joining me today. If you're new to this channel, this is pretty much an open space to talk about how we can manage our finances better and most importantly, how we can improve our earning capacity as well. So there'll be various tips and subjects to cover, which you would hopefully be interested in. So please do press the subscribe button if you haven't already. So in today's video, we're talking about your credit score, why it's important, how you can maintain it, and what you can bear in mind if you are on a journey where you want to try and make sure you're building that up as much as possible. Now, none of my content constitutes as financial advice. If you do need financial advice, make sure you speak to someone who's registered and regulated, okay, by the Financial Conduct Authority in whatever country you are in. Okay, so there is a video that I did previously which was addressing whether you need credit or not. It was actually called You Don't Need Credit, which was a little bit sarcastic because the premise of that video was an argument saying that you actually don't need credit, but we did balance it out and sort of say why you would need it in certain circumstances. So do check that out if you haven't watched it already. Okay, now some of you might already be aware that a credit score is pretty much just a prediction of your credit behavior. Okay, it is determining the likelihood of you paying a debt or a loan back on time based on information that is already held about you on credit reports. Okay, now in the UK, I know that for sure that there's typically a 3-digit number that determines or shows whether you can be accepted for credit. So the higher the number, the more likely you are to be accepted for credit, and obviously the lower it is, the more unlikely you are. So it's a low credit score versus a high credit score. So most lenders would desire that you have a higher credit score so that they can lend you what you're looking for, particularly whether it's a mortgage or it's other lines of credit for what you desire. Now, we are aware that there are these credit reports that exist, right? And who does these credit reports? Like, where do they get the information from? So again, I can use UK examples because that's what I'm familiar with. There are 3 main credit reference agencies in the UK. Okay, you don't really need to know too much detail about them, but I think it's important for you to know who they are. You can go on Google and search for them because it's actually important for you to be able to have access to your credit reports from the 3 different agencies, because they probably hold slightly different information about you, or they probably collect slightly different types of information which may have an impact on your report. So once a year, it's probably a good idea to have a look at all 3 just to make sure that things are consistent and there's nothing there that is, dodgy, that you've not done, or something that's at risk that's not actually to do with your profile. Okay, so I'll just tell you who they are very quickly. So it's Experian. I guess that's probably the most popular, and that uses the MSE Credit Club. So you can access that for free. And then the second one would be Equifax. Okay, and Equifax uses Clearscore. I think you might be familiar with these terms if you've heard them before. Again, you can have free access through Clearscore to get your Equifax report. And then the third one is also TransUnion, which uses Credit Karma. So one of those, at least you probably should already have an account with one of those. If you haven't, please visit those sites and make sure that you get access, plug your details in, create a profile, and you will be able to see all the debts that you owe, how you've been paying them, and what your report looks like, as well as what your score is. Now, generally speaking, the scoring can be slightly different. So for example, with Equifax, they use a scoring up to 1,000, right? Which is easier to understand, because then you know that if a credit score is above 810, so 811 and above, it is considered excellent. If it's somewhere in the middle, like 671 to 810, then they call it very good. If it's below that, but not under 439 thereabouts, then they just call it fair. So they've got those thresholds. You see the same as well with TransUnion. They only go up to 710, which makes it a little bit more tricky to gauge. But as long as you know the thresholds, you're absolutely fine, and you have an understanding of those tiers, you just see where you stand. I recently had a conversation with someone who was celebrating an Equifax credit score of 999. It was all green, and they were like, woohoo, extremely excited, and that was great, right? And so I'm sure, that works well in their favor if they ever need to borrow for a good and justifiable reason. Okay, now what is it that you can actually do to make sure you improve your credit score? And you might need to improve your credit score because you actually want to build yourself up from where you were before, which may have been a negative territory or a place where the credit score was poor. I've been through those journeys and I've had to work on that over the years, and I'm grateful for where I've reached at the moment. But for some people, they could be building from scratch, right? Maybe you're new to the country, or it's your first time getting into employment, and you want to start building up your credit in order for you to start making certain purchases, such as maybe buying your first house, or even getting a mobile phone contract, guys. Some of these simple things that we take for granted will require that credit history. Okay, so it's very important for you to borrow what you can afford. Like, that's a very, very obvious thing, but it's the little things that we miss out on and we take for granted that we end up kind of losing out on. So if you want to use credit, just make sure at least you're able to afford the repayments, and not just the minimum repayments. In my previous video, I mentioned before about how I used to just look at making payments of the minimum amount. It's really beyond that, to be honest, because if you're only making minimum repayments, it means you're eventually paying high interest, right? So you want to be able to make sure you can exceed those minimum repayments as much as possible where it is an option. Okay. The second thing is just to make sure that the timing of your credit card payments is aligned with the due date. More importantly, even with the statement date. Okay. Now this is a little bit of a hack. So most people work towards making payments on the due date. Okay, and sometimes it's not a good idea to just pay them on that due date. It's actually better to pay them before the statement date, because then by the time the statement is issued, your balance is actually in a better position. And I know it's a loop and it's a cycle. It's gonna keep repeating itself with you making payments, but timing is of essence. So just make sure that you don't expose yourself to late payments by only trying to meet the payments on the due dates. Okay, you can of course consider setting up direct debits, whether it's for your mobile phone contract, or it's for paying back a loan, or it's paying back on a credit card in particular. I think loans, in most instances, you are forced to sort a direct debit anyway. But I think when it comes to other payments, you may choose to be flexible, but a direct debit will make that much easier for you. Okay. And the other obvious one is making sure you're staying within your credit limits, right? As much as possible. You're keeping your balances as low as you can. There is a term that they use, which is something like credit card utilization. It's like a ratio of optimization, right? So let's just say your credit card allowance is £5,000, right? It then means that there is an average number, so which apparently is actually 30%. So if you have a credit card balance that you've utilized, which is 30% or low or less, it's actually good for your credit rating. But if you've used up so much credit on your credit card and you're hitting like 60%, 80%, 90%, then that actually means that you probably are over dependent on credit, and that could work, against you in a way, or it can lower down your credit score. So it's really something to keep an eye on, and just make sure that you are in a good zone of your utilization percentage. Okay, the other thing is, I don't know how this applies to other countries, but I know in the UK, registering to vote at your current address really, really helps, because when these credit agencies look up your name, they're going to be able to see whether your address and your name are on the voters roll. Okay, so that's very important. The electoral register is used by many companies just to authenticate who you are and to support the fact that you are who you say you are and you are living where you are. Okay, and you do this even if you're still a student and you're living with parents, or you live in shared accommodation. You can still use the electoral register to make sure that your name is updated. Okay, make sure that like I said, there's this aspect of checking regularly. Just make sure that everything looks accurate. So nowadays we've got problems with cyber security, fraud, and things like that. Somebody could use your name to make purchases incorrectly, and you probably haven't spotted it. So when you look at your credit reports, it gives you a good idea to authenticate that these are definitely my lines of credit that I owe, and I'm aware I'm making the payments as and when I'm required. So you'll be able to pick up any suspicious entries that come up on your credit reference report. Now, what are the kind of things that could potentially negatively impact your credit score? So these are things like frequently setting up new accounts. So right now there's a big craze about, in the UK in particular, about getting money, being paid for switching bank accounts, and a lot of people are switching bank accounts, wanting to get paid £150, £200. Fine, that's fantastic. But if you are doing that a lot at the time that you're doing that, it actually lowers your credit rating at that moment. So just make sure that if you have an intention of switching bank accounts, to take advantage of those promotions, it's not at a time where you then want to have a hard credit check done on you, because it would have an impact. And it will recover after some time, but it's just making sure that the timing is right. And I think we also mentioned already about staying close to the top of your credit limit. As much as possible, try and stay away from the credit limit and try and pay off as much as you can, so that you are as lower down as possible, in terms of where your limit is. Also, avoid making too many applications for credit in a short space of time. Okay, you go on this website, you're searching for something, you go on another website, you're searching for another line of credit. It's all happening so quickly, because all these could be hard searches that are being done on you. So if you're doing too many hard searches, the system can recognize that you are desperate to borrow. So you just need to make sure that whether they're successful or not, you're not trying to do too many at the same time. Okay, and make sure you don't miss any payments. Okay, if you miss payments, they flag as a red item on your credit report or with your creditors, and it really does lower your credit score. Just make sure that you are making the payments on time and you're not missing them. And most times when you miss a payment with a credit card, you actually then get get charged a late payment penalty fee on top as well, which is not desirable. So just do as much as you can to make sure that you are borrowing what you can afford and you're not missing the payments. Also, making sure that you have some kind of credit history is important. I know we said that for some people they could be new to this completely, but just do what you can to make sure that you do have some form of credit in the past, or you're starting to build up on it. But like I said in the previous video, I mentioned it only has to be if the credit is absolutely necessary, guys, because sometimes people end up in a debt trap that they're not able to get out of. Okay, so just make sure that that's something that you are managing well. And if you've reached a situation where you are struggling to actually pay your debts back, and you decide to do some kind of debt consolidation approach, where perhaps you close some of the credit card accounts and then you consolidate them into one loan, for example, that's fine. But just make sure that you're aware that this can also lower your credit score. And it's kind of counterintuitive, because you're trying to solve a problem, but in solving that problem, you're probably creating another little problem. So just make sure that if you make the decision to do that, you probably don't have any intentions to borrow any further, and you're just on a journey to reduce your debt and become debt free as much as possible. Okay, there are some myths also on what would potentially affect your credit score. I remember people used to say to me in the past, my credit rating is being affected because the person that used to live at the house that I now rent, was bankrupt or something like that. So there is clarity in the system that lenders are only interested in the financial matters of the person at that address, right, at that time, not someone who used to live there before. Okay, however, what would actually impact you about your address is if you've got joint accounts with someone. Okay, so you could live at the same address with someone, but if you're not connected financially, then that has got no impact. It's only if you have joint accounts with that individual, then there is a connection with another person. Okay, so I think we need to just make sure that that's clear. So friends and family that live with you, there's no impact. Previous people that have lived at the address, there's no impact. It's only if there is a joint accounts that are in the picture. Okay, things you've done in the past, people may have made mistakes in the past, or they've been bankrupt, or some stuff has happened. The system is not totally unforgiving. Some of this data does clear after a period of time. Normally in the UK it's about 6 years, right? So if you've missed credit card payments a decade ago, it's not going to haunt you for the rest of your life. But there could be times where you're filling in forms and you're asked to confirm if you have ever been bankrupt or whatever. You obviously have to be honest, but on a credit check, if it's after 6 years, you shouldn't be impacted by that. Okay, now you checking your own credit reports regularly. Some people do it every month, some people do it more periodically. That doesn't affect your credit score. Okay, it's different to credit agencies, or it's different to lenders doing hard checks on your account, right? Them checking frequently, yes, that has an impact, but you having access to your own credit report to check it frequently has got no impact whatsoever. Okay, so just make sure that that's clear for you, and you are comfortable with understanding these points. Now, what are we going to do as a next step? I think ultimately, like any topic we'll discuss about finances, it's really just down to us understanding the importance of financial education for ourselves. Okay, I can't emphasize this. Like, financial education and financial literacy and managing money efficiently, right, is something that we just need to keep learning as much as possible. Some people are a step ahead of others. Some people already know the theory, but they've not applied it in practice. Just see where you are. Look for resources, attend workshops, read books, go on courses, right? Do whatever you can. We're in an information age where there is so much that is available to our disposal in our fingertips. So let's really make sure that we utilize information that's available, as long as it's good information, and educate ourselves, because sometimes we can suffer because of lack of knowledge, but that information is actually available. So today, just challenge yourself, to educate yourself as much as possible, and make sure that you take the step to check your credit reports with any of the three agencies that I've mentioned. I'll put them in the description of the video as well to help you get to them easily, and hopefully we can all be on a better journey to manage our finances better. So again, stay tuned and stay blessed. I will see you on the next video. Bye.